Welcome to Currency Watch. This is Chris Keene from akeenpointofview.com. Summer trading had been kicked in throughout the majority of the week with the 4th of July holiday on Wednesday. Most traders just stood aside on Monday and Tuesday. Today, Thursday, promised to be the beginning of a more volatile session and did not disappoint. The Bank of England announced, kicked it all off today with the announcement of an additional £50 billion added to its asset repurchase program. This was highly anticipated, so the initial reaction to this news was rather muted in the Great Britain USD cross, but almost simultaneously, the Bank of China announced a surprise interest rate reduction, and this did increase the risk-off sentiment in the market, but only slightly heading into the pre-market. And the majors moved down generally, but not any major increases in risk-off sentiment and dollar strength. But then shortly after, the ECB announced that they were going to lower interest rates by 25 basis points, and they were going to move the deposit rate down to 0%. This did increase risk-off sentiment, and on top of that, the U.S. ADP report came in 75,000 jobs better than what was anticipated. So that put QE on the back burner for the beginning of the day. So in summary, we had Bank of England adding more to its quantitative easing basic program. The ECB was lowering interest rates, as was the Bank of China. But then at the same time, we had a positive economic indicator come out of the United States. This all led to a mixed signal and led traders to be a little bit confused and not really sure exactly what was going on. And it could have put QE expectations on the back burner. So we had a general risk-off sentiment, with many traders maybe waiting for more confirmation of which way the global economy is heading with non-farm payroll report due out tomorrow from the United States. This report, if it is disappointing, would probably indicate that we could have a global slowdown underway. But if the report is better than expected, it would get some of the gloom and doom out of the markets. Let's take a look at a few pairs and see how they could trade tonight in Asia, and maybe we'll look at briefly what could happen after the non-farm payroll report. As you can see, the Euro USD broke down from the 125.20 all the way below 124 today, and it actually maintained below 124 throughout the day. If we can get this 124 is going to be the pivot heading into tonight's trading. If we pop above this level, we could drift higher with general profit taking throughout Asia and Europe before the non-farm payroll report at 8:30 Eastern time tomorrow in New York. But if we do remain below this level, we'll probably just consolidate here generally in a tight range. After the report tomorrow, depending on how the news comes out and how it's translated, I mean, it could be a bad number and people would take that as an indicator of further quantitative easing, or it could be a good number and people would add to a risk-on environment, but the bad number could also push the pound lower. But let's just look at supports. If we get a bad number, we could move down initially down. I would see the first level of support would be at daily resistance at 122.85. If we get a pop-up with a good number, we could see a move up towards 125.20 and maybe ultimately all the way up to the 125.68, 125.70 area. The next pair we're going to look at briefly is the Great Britain USD, just because it has been stuck in this trend over the last 3 or 4 weeks in this general range. So if we get any move down, I would be looking at support to be down at 154.75, and if we get a positive number, we could make another run all the way up tomorrow towards the 157.20 range. Well, actually maybe not tomorrow, but over the next 2 or 3 trading days. The Canadian USD, I just want to point out to everyone, has been well supported at the 50 fib at 101.23. And so currently today it did break down a little bit below and move all the way down to 101. But this 101, 101.23 is going to be a strong support zone, where we could find a lift off that. If we break through that tomorrow, our first level of support is going to be the 0.618 fib from the May's lows, which comes in around 105.50, and a push higher initially could go towards 102 and 102.30. So it's really all about the fibs in the USD CAD cross. And if you actually have to trade tonight because you have an itch to scratch, you can look at the New Zealand USD, who has just been range bound over the last 3 or 4 days. and we have a top here at resistance at 80.60, and we have support down at 80. And let's take one last look. Let's take a look at the Aussie USD. That's also been in a similar very narrow range. Where you can see we can find support at 102.50, and then up in the top we have resistance at 103.30. It could drift around in that range, and if once again, if it moves up to one of those extremes, you could, if you want to do a short-term scalp in Asian or European trading, that could be a candidate. So once again, in the bigger picture, most traders are waiting for non-farm payroll report to confirm the overall risk on, risk off environment and to see how the global economy is going, because it appears to be slowing in Europe, Asia. So America, people are wondering if it's going to encompass the entire world, or if America can somehow be a growth engine. I'm not sure if that's going to play out, but we will find out tomorrow. So this is Chris Keen, and this is a Keen Point of View, and this is Currency Watch. Keep your trades keen and play it safe.